And for those that are not aware, so Cycle CPA, we're a virtual accounting firm. We do everything from bookkeeping, CFO, and tax services as well. We're totally virtual, and we help green industry companies throughout the country. That's our focus. Currently work with a couple hundred companies, and really a big part of this webinar here is to help relay some of the things that we're seeing within the industry to help everyone here. That's the goal. And I see many of you have already found the chat, so feel free throughout the webinar to, if you have different questions, even just kind of different bottlenecks that you're facing. Please, mark them in the chat, because that's one of the nice things about being here live is that we're able to take advantage of that. So, and we're going to go over really the top 7 financial challenges of green industry businesses, with the first being, okay, for those of you that may have multiple departments or multiple service lines, it's turning around an underperforming department. So that's going to be the first topic here that we're going to cover.
Yep, and I'll start off by saying, like, you can't fix what you're not measuring, right? So you have to measure something in order to know that you need to fix that, or that you have a problem with that, because a lot of you may have like a gut feeling that something is off in the company, or you're maybe cash flow, you're living day by day, you're trying to collect the deposit here, deposit there to make up some cash and pay your employees and stuff like that. But the first thing is you have to measure each department, right? So a lot of you may have like a maintenance division, irrigation, harbor, hardscape division. So, but maybe one of those divisions is dragging down your entire company, right? But you just don't know which one, or it could be a combination. So let me share my screen here. And can you see my screen?
Yep.
Okay, so this is sample QuickBooks Online file. So in order to track your profit and loss by division, so your revenue, your direct cost, your overhead cost by division, let's say you want a profit and loss for your maintenance, a profit and loss for your hardscape. In order to do that, it does take a little bit of work, right? But it's truly worth it. And what I'm going to show you here is how to set up your QuickBooks so that you can track those items, okay? So the first thing you want to do to set it up is you want to go to your account in settings. And then under advanced on your QuickBooks, you see here where it says categories, it says turn on classes. Track classes. So a class field in QuickBooks, what it means is it assigns transactions to different divisions, right? Departments, locations, or product lines. And that's what we want to do. So we want to click save. And let's see here. So we have a checking account, right? And we have all the transactions in the checking account. So we have deposits, money that came in. We have expenses, like we went to Hicks Hardware, for example. So let's say I click on this transaction, right? And I want to categorize this transaction. So I click Hicks Hardware. And at Hicks Hardware, I went and I purchased job materials there. Right? But then I want to click the class. So right now this is a sample file and there are no division set up, but I can add a division here. So let's say that this was for my hardscape division. Can save. And now hardscape shows up. So you're going to need a process for this, right? You're going to need somebody that gives you all of the receipts, whether that's your foreman, your manager, whoever, or your administrative person in the office. We found that any of those sources, I think the administrative person in the office would be good to collect all the receipts. And on the receipts, you have to put your employees have to put, this went to the hardscape division, this went to the maintenance. And if there are different components of the receipt going to different divisions, then they have to clearly label that. So I would hit hardscape and then add, right? So I know I looked at my receipt and I did that. Then we have money coming in, right? Received, deposits from Travis, right? So this is a little different because you would have had to invoice Travis, right? And when you create an invoice, whether it's on QuickBooks Online or any CRM that you do have, when you create an invoice, you have to tell the system, whether it's, Job or Element, whatever you're using to invoice out of, what services you provided, right? So that's an easy one. Like, let's say that I installed some garden rocks, 500, whatever. And let's just, for simplicity purposes, because it's already created, I put hardscape division. So now this invoice here for $500 is going to get coded to that hardscape division, right? So now my revenue, you would have to do this with all the invoices going out. So all your revenue is captured and going towards the correct division. So that way, when you see the finished product, the profit and loss, you're telling QuickBooks, split this out this way for me, right? So a lot of you probably do your own invoicing, and that's good because you know directly, if you're the one that's doing the invoicing, you know exactly which division it's going to. I think it's just the expenses that you're going to need to just collect the receipts. Another question that we get too is like, for example, let's say I have this expense for pie cakes. I don't know what that is, but it sounds like a bakery to me. And now I'm getting hungry. I want a cake. But anyway, I ordered a cake for somebody's birthday, let's say, right? And then my clients ask me like, hey, that cake is not going to a specific division. It's just a company expense, just like electricity is, or going out to a restaurant, or marketing, or some of the overhead salaries, right? Maybe it's not going to a specific division because it's for the entire company. So that at that point, I would put this under meals, right? And under class, you could just leave it blank. Don't put it towards any division, okay? Because this is just going to get allocated to like an overhead section in QuickBooks. So just add it like that. So the overhead costs like electricity, telephone, things like that you cannot allocate to a specific division, you won't code it to a specific division. You will just do the overhead allocation at the end, where you take a percentage of your total overhead costs and allocate it to each division. Okay. And just another thing, like let's say you have Hicks Hardware, but you say, hey, like I have on this receipt, I have multiple different materials going for different projects. And some of it is going to maintenance and some of it is going to hardscape. So how would I go about that? So you would split this entry here where it says split. And you could just do where, half of the amount could just go to the hardscape division, and then you could select any other category, a portion of this amount, and then you can just add another department here. And if I could spell maintenance, that would be great. But yeah, so that's how you would split it, and then you would split and add in QuickBooks. And then you have to also split up your field labor costs, like the amount that you're paying to your field laborers. Like if you have different laborers that are cross-trained, like you have John that works both in maintenance and hardscape, you're going to have to track their hours, because only then you would know how many hours to allocate, how much of their salaries to allocate to maintenance, and then how much to allocate to hardscape. But once you're all done with that, then you go to standard reports. And what we do is we'll pull a profit and loss by class. And when we pull a profit and loss by class, you see here, you saw those few categories that we did. It split it up to my hardscape division, right? And then once we were to allocate overhead and stuff like that, we can see the net profit from the hardscape division, and then imagine all the other divisions, and then we would go from there. So, Joe and I have seen where we had done this for multiple companies, and we saw if there was any loss leader in that company, and then, working from there. But without that being feasible, or without being able to see that, we wouldn't be able to really diagnose where the issue is, right? And again, not that it has to be one division that is going to be the issue. It could be multiple, but different issues. We've seen that too. But it's just something to be made aware of as well.
And this kind of accounting makes sense once your company starts to develop enough where you have people working in separate divisions, and even the time that's going to take in order to make sure that the receipts are being labeled, or there are some apps as well which can help when it comes to allocating some of the direct costs in a little more automated way. But if you're a company under $500,000 in revenue and you're still growing in growth mode, trying to get to the next level and still trying to develop a lot of your processes, building some of the class tracking in could be a little difficult. It is possible, but I just want to put that out there as well. But, especially if you start to have certain divisions that have very different business models and ways that they're being operated, for instance, like an install division versus more of a maintenance and recurring division, then it becomes even more important to make sure that you're looking at the financials for each. One of the things too, in regard to the overhead, is ultimately making sure when you're diagnosing that there might be an issue with a specific department, that you're also being honest with yourself in regard to how much overhead is needed for that specific department, and more specifically, overhead salaries, right? So if your admin people, or if you as the manager are spending 80% of your time on a department that makes up 50% of the revenue, having that understanding that, wow, that department is actually requiring a lot more from me. So that's something to understand, and especially with the overhead salaries, right? So thinking about all the managerial or administrative salaries, you can actually allocate that based on how much time you are spending in that specific division. And there's never going to be an exact science to that overhead allocation, but it's really want to get as close as possible to it. Even if you're tracking your own time, or, trying to just get an idea of the certain admin team and the time that they spend, because that's going to give you a true picture into, okay, how much help does that department actually need from a full financial health perspective? So definitely something to keep in mind. And when you're looking at the financials as well within the specific department, understanding that, okay, are we dealing with something where we feel that it's running efficiently, that we're managing it well, and it's more maybe just a pricing issue? Or is it something where, no, we're priced at pretty much what the market can bear, and we're priced at as much as I can sell based on the value. It's really something based on more of the efficiencies or maybe the route density if you're providing more reoccurring service, or maybe so maybe it's either pricing or efficiency, right? So it's really trying to look first from a bird's eye point of view and see, okay, where do we need to dive in to really improve the numbers for that specific department? And then it's creating that financial turnaround plan ultimately, right? So without that clear roadmap, it's hard to really come up with those improvements, right? So
and also I think, just before I forget this, is like we're saying, how do you turn around a division? And sometimes like your pricing is just off. Like we've seen that too, where clients didn't really know like their overhead for hardscape specific. They knew their overhead for the entire company, but not just for hardscape or like maintenance. And because you may think about this, you may have a manager or project manager that helps out in the maintenance, but they don't know anything about hardscape. You're the one leading that or whatever it is. Their salaries would be mostly allocated to that maintenance division. So you could gain like a competitive advantage by knowing how much overhead you need to recover by division. And sometimes that's all you need is like a pricing revamp using your actual numbers. And then that's how you're going to turn around that division.
Absolutely. Yeah. And first, it's really kind of understanding that, once you kind of diagnose those things, then building in the plan, right? So what does success look like, right? Making those measurable metrics something within the company that you can monitor, right? So maybe it's a gross margin target, right? So after all your direct costs that are associated with the work in the field, what is left over, right? What is that gross margin? Is it a 50% goal, right? What is the revenue per crew per day that's needed in order to hit your goal? What is the field labor cost as a percent of revenue, right? For a maintenance company, is it 30%? If it's an install company, is it 20%, right? So coming up with those goals for your specific company as a start, and then coming up with the systems to hold the team accountable, right? And I think that when you look at departments, one of the things that you can kind of think about is a company like Walmart, right? They have thousands of stores. Sam Walton, the owner, right? One of his big things was pushing responsibility down to each individual store, but then allowing some of the ideas to kind of bubble up as well, right? So when it comes to pushing responsibility down to each department, it's making sure that each is operating almost as its own separate business unit, right? Each one should be profitable. Each one should have a path to profitability. So keeping all that stuff in mind.
Yep.
And I think what it also comes down to is a big part of any service-based business is the people, right? So if it is more of an efficiency issue in which you kind of diagnose, you want to think about what are the incentives for the team, right? Because typically if you show us what the incentives are, you can probably almost come up with what the outcome will most likely be. So, it's thinking about that, and then, each quarter or each month building in those reviews, and ultimately you're going to want to see progress, because that's really, when it comes to looking at improvements within the company, it's great to not act in a quick way where you're sacrificing accuracy or you're sacrificing different things in your company, but act quick enough where you're not showing up a year from now speaking with your accountant or consultant or, speaking with your team and being in the same position. You want to be in the moving in the direction where you're able to set those quarterly meetings with your team and review some of those metrics and be able to see that turnaround happen. Because if you're not seeing progress, what might ultimately also be the solution, and this is part of the reality, is maybe your team is just not designed well enough to handle that specific service line. Maybe you should focus more on another service line that you're already operating very, very profitably with. And then, so the next financial challenge is for those of you that may not have as much of a financial visibility and as good of a financial reporting setup.
Yeah. And I'll share my screen here. So this is green industry, an example of like a green industry chart of accounts. And so this is what we see like when we help new businesses and stuff like that in the green industry. We don't see like this specific chart of accounts already set up like in their QuickBooks or like they've ever used it before, anything like that. And just to start off, so chart of accounts, what it does, it's like the buckets where you're going to categorize your transactions into. So like today you went to go to the gas station and you filled up your truck, right? That would be fuel. That's the category. That's the chart of account item, fuel. Or you purchased a truck. So that truck would go under truck as a fixed asset and so on and so forth. And the reason why you want to have a green industry chart of accounts rather than the one that just comes with QuickBooks Online or whatever is because you want to be able to look at your profit and loss and your balance sheet in the way that makes sense for your business, for a landscaping company. Because at the end of the day, the way that you estimate, like the way that you create your estimates on LMN, job, or whatever that CRM is for you, you want to be able to compare that to your financial statements. You don't want your financial statements to look different than how you create your estimates, because then when you try to see, okay, I think I lost money on this job, but I'm not really sure like where I went wrong, you're not going to be able to compare apples to apples, right? It's not going to be structured the same. And another reason is because of peer benchmarking. So sometimes like you'll be in a group or whatever it is, and people talk about gross profit, net profit, field labor percentage. You want to make sure that your financial statements are in line so that you can compare your numbers to theirs, because their gross profit may be something so different than yours. Like if they just used a regular QuickBooks Online chart of account, their financials won't be set up the same way as yours or accurately, right? So these are the chart of accounts that we have here. And I think the major thing is the cost of goods sold or cost of sales. That cost of sales are your direct costs that you could directly trace back to a specific job. So I can trace back like this material to a specific job, right? That's why I have supplies and materials here. But I can't trace back bank charges to a specific job. It's just part of my overhead, right? So that's why it's just an expense. But payroll field, in the field, I can trace back my direct labor hours to a specific job, right? So that's the goal here, is just making sure you have your direct costs in the cost of goods sold and your overhead expenses in the overhead section. Because in essence, if you have all of those items lined up properly for a landscape company, when you generate a profit and loss on your QuickBooks account, then what the gross profit is income, your revenue, minus your cost of goods sold items equals your gross profit. So if if my friend that I know, I know that my friend is tracking supplies and material in their overhead, I know his or their gross profit is going to be much higher than mine because I have supplies in my cost of goods sold section. So I wouldn't be comparing apples to apples, right? But the way that you estimate is that you're putting in, this is how much material I'm going to use on this job, this is how much hours I need to charge for my laborers, all this stuff. And therefore, I can compare my estimates to my financial statement. So I can make better business decisions, because if it's not structured properly, then we can't give you any insight, right? So this is the first thing we do if you were to come on board, is we set up the chart of accounts to make sure that we can do the benchmarking. We can analyze your financial statements. And if you're invoicing on Jobber, if we log in, we can trace it back to the financials and for it to make sense, So that becomes a huge, huge part of it too.
Absolutely. And, one of the other aspects about getting better visibility is, once you have the chart of accounts set up and you're viewing the information as the owner or leader of the company, you want to be able to see a snapshot of certain information, right? So looking at some of the key performance indicators, or really those metrics that are going to drive the financial health of the company, whether it's a dashboard format. So those of you that are Cycle CPA clients within the Cyclescape reporting that we review, even QuickBooks has some great options as well within some of the comparable information you can see within the reporting. Whether you're comparing to the previous periods and stuff like that, it's important to have that kind of setup. And what I recommend is even blocking out time in your calendar each month to make sure that you're setting aside time to view that information. And with this as well, getting the visibility, getting more granular means also a lot of times job costing. And it's similar to what, the similar components to even some of the service line tracking that Carla went in depth with before as well. And it does, yeah. So.
Yeah. And I think with job costing, it requires work. And that's why I'm not going to sugarcoat it for anybody, because I think a lot of people in the industry just say job costing, project tracking, but no one really knows what does it entail. No one knows what it entails, because when you talk about what it entails, then people are like, oh, that sounds like a lot of work, I don't want to implement that. But I'm going to give you guys an example. For a company that we implemented job costing, just to motivate you guys a little bit, they went from a decrease in revenue of 80%, but now they're increased in revenue by 200%. And then another company that was at a decent profit of 12, but now they're at 18% profit. So profitability, we see the project costing and that it is truly beneficial and valuable, even though it does require more work. And so I want to describe that work because I don't think it's talked about a lot. But depending on what technology you're using, right? Your software stack. So you could be using Element or QuickBooks, I don't know, JobTread, whatever CRM that you're using and whatever accounting software you're using. And the different softwares that you use, to invoice out of or do your estimating from, may have different capabilities, right? And you may be able to upgrade, to add users or add different functions, whatever it is, right? And some people like to say, well, I can't do job costing because my software stinks or whatever it is. It could be the case. Maybe the software is a little limited, but also what I see is just people are just not using it like efficiently or the way that it should be, right? So whatever software you have, it doesn't matter. You're going to need receipts. You're just going to need receipts. And that is a huge pain point for people, because then you need to have somebody that's collecting those receipts every day. And your employees need to write on the receipts. Okay, this receipt was for the project at Mrs. Jones' property, the project at XYZ company. You're going to need that information, because without that information, you're not going to have job costing. Where is your job costing coming from? You're not, because you need your actual expenses tracked. So that's the first thing, is you're going to need receipts. And I can also, another way where I'll explain later, but yeah, the first thing is receipts, and employees need to be held accountable to writing on them and collecting. Somebody needs to collect them every day. Once you have those receipts, that's the hardest part, is really the receipt tracking. Then if you have an office administrator or somebody like us, a bookkeeper, an accountant, whoever it is, you turn over the receipts to them and say, here's all the materials, here's the properties that it was allocated to. Then us as accountants, we take those and then we start allocating those expenses to those projects on QuickBooks, right? And maybe we use your CRM to help us too, right? Because if you're invoicing out of job or element, we need to know like the revenue that project brought in. So we would use your CRM. We have the material costs, but then, so the second thing you need is direct labor. So now your laborers are out there working on the job, right? For a few hours or whatever it is. So now the second thing is that they need to track their time. So now you need to have some sort of time tracking device, or maybe that's part of your CRM package, or maybe you need to upgrade to get it, or maybe it's part of your payroll package where you can track time per project. Whatever it is, you have to figure that out. How am I going to get time tracked per job? Submit those timesheets. We look it up on your CRM, we look it up on your payroll, whatever it is, and we know what each one of your staff members get paid. So we know the project it needs to go to, we know how much they get paid, so that's an easy like math equation, right? And then we allocate that amount to that job, their salaries and wages to that job, right? So there goes the biggest two things that are needed for accurate project costing, but it's not as straightforward depending on your software. And then the third thing that you need is what? What am I missing from that? Can anybody guess in the chat? So we did materials, we did direct labor. What else would I be missing from my job costing to have an accurate job costing report? So the third thing would be overhead. So expenses, overhead, exactly. Awesome.
Got it, Danny.
Good job, Tyler and Danny. Overhead. And remember what we spoke about before. Overhead are expenses that are not directly tracked to a job, right? Like my credit card fees, my insurance, right? All of these overhead expenses are not directly tied back to a project. So I'm not going to take like my insurance and put all of my insurance costs to Mrs. Jones' project, like that wouldn't make sense, right? Because that's an expense that is for my entire company, for all my clients, for all my employees, whatever. So the way that I would allocate my overhead expenses is I would take that number as a percentage of revenue. Let's say that, the average overhead expense cost for the industry is 30% of revenue. So I would take 30% of that, all my overhead costs, and then allocate it to my job. So the revenue, whatever the revenue is, take 30% of that and plug it in as my overhead expenses, right? Obviously, that may vary. If your overhead expenses are just 12%, or if your overhead expenses are 40%, then that's the number you would use. And then I would just do like an entry to cover all overhead expenses, because I'm not going to split everything out like interest, bank, in this job costing report. That does not make sense. That if I were to go and look at every single line item, no, I'm just doing overhead expenses. Overhead allocation at 30%, because that's how much my company spends on overhead, allocating that, bam. So now I have revenue on my job cost report. I have direct labor. Remember, I have to track hours. And I have materials. Remember, I have to track receipts. Then I have my overhead expenses. That's on QuickBooks, right? That's on your profit and loss. I know the percentage. And if I take my revenue minus all those costs, I'm going to get the net profit for that job. And so knowing the net profit for each job is such a powerful tool that now you can confidently go in and do a price increase if you have to. Like, hey, Mrs. Jones, we actually budgeted for 5 hours, but we're spending 10 hours at your property. If it's like a recurring stuff contract, or if you underestimated the amount of time that it took for you to install that patio, right? You'll know, and you'll be able to catch your mistakes for next time. This is how you run a profitable company. If you know exactly the profit of each job, all of that profit from each job makes up the profit for the entire company. All these little job cost reports now make up the profit for your entire company. So although it does sound like a lot, like you're going to have to implement some systems, and like we can help you with that. And you're going to have to hold people accountable. But the return is that you're going to feel so good with your numbers. You're going to know the numbers like the back of your hand. And that's what we want to accomplish, right? So I just wanted to go over that because I feel like a lot of people, like I said, say job costing, but don't know or are unsure of what that entails.
Absolutely. And a big part of this too, especially even when you're looking at the monthly financials as well, is, it's one thing having the visibility of some of the financial data, but you also want to get it more on a timely basis. So not just at the end of the year, but also monthly, right? So that you can make some of those management decisions on a more frequent basis. Instead of waiting until a lot of things already happened and you're kind of limited to make any changes, throughout the year, being very proactive with all of that. Our team, and, even if you go with another accounting firm or whatever you decide to do, I think, making sure that you're getting that by the 15th of each month, so that you can make those decisions based on some of the data as well. And, one of the other biggest challenges that we see companies facing is within cash flow, right? So how can we really approach that and improve it? It's a big thing that a lot of people face. So, we'll kind of break this down into a couple of different parts, starting with, if you're ever facing something where you need more of an immediate help in regard to improving cash flow, there's a couple of things that you can do. And one of them being collect outstanding accounts receivable aggressively, right, as soon as possible. So calling the top 10 overdue accounts directly. So picking up the phone and calling, it's, there's nothing that can replace that sometimes. Also, are there any non-essential payments too?
Yeah, sorry, Joe. We had this happen to one of our companies that we work with. Like, we were in a cash flow crunch, and we're like, we just need to call all of these clients tonight and try to collect. And they felt very uncomfortable, like, making those calls. But at the end of the day, you performed your service. Like, they need to pay. You're not a bank, so don't ever feel bad about that.
Yeah, and also thinking about, okay, are there any payments that we can push off, right? So whether it's, maybe different supplier payments or other vendors or different expenses, right? So if it's not essential to the operation, thinking about, kind of delaying some of that as much as you can. And I'm not saying on a long-term basis, but really trying to do something within that immediate time frame if you're having some of those issues. And then, is there idle assets or equipment that you can liquidate, right? Can you sell off some of that stuff to help get some of those funds there in the short term? Or maybe looking for a line of credit. And the best time to get a line of credit is not when you need it. So, really trying to be as proactive as possible with that, especially as you're budgeting it out or creating a forecast. And if you're kind of seeing, okay, traditionally we're not too good with our cash flow, try to act, a couple months in advance at least to try to lock in, a line of credit. And then even some of the owner's compensation, right? So, maybe put a pause on some of the distributions to yourself or the salaries until you recover. And that's also something that, you can build trust with your team, and then also helps to buy some time as well. So don't be afraid to take some of those immediate actions. Now, there's also things within maybe if you think about, you have a little bit more time to work with, maybe a 30 to 90 day plan. That's when you really think about, okay, what is that forecast that we can build in, right? And even looking at that into that weekly. So for those of you that work with us more from accounts payable perspective over at Cycle CPA, we even implement weekly meetings where we kind of look from a cash flow perspective and look at, okay, what is some of that AP that's due versus, what are some of the expected cash inflows, right? So looking at things like that on a weekly or monthly basis. And then also, can we collect a little bit more upfront? So maybe we're traditionally, we only collect 10%, 20%. Can we increase that, right? And I always say, don't place limitations on yourself based on maybe companies that you've worked for in the past, or maybe things that you feel without even trying at first, right? So let the customer be the one that pushes back, because typically, once you get the job or, once you win the bid, stuff like that, the clients are not as maybe picky about, how much upfront that you'll collect in regard to progress payments. So always try to push the envelope with that, because that's always going to help cash flow. And then, especially with commercial jobs, always trying to find those different ways in regard to just the payment terms. And then also, as we kind of looked at a little bit before, when you have a little bit more time to react in regard to cash flow, having a tight feedback loop in regard to some of that job costing data, that's going to be crucial as well, because, again, the same thing as if, you don't want to wait a year to look at some of the data. Job costing allows you to look at data even more frequently than monthly. So looking at stuff like that, renegotiating different contracts and repricing some of your work as well, if need be. Now, when you look at maybe some of those longer term efforts that you can do to improve cash flow, really thinking about, okay, building out a more comprehensive accounts receivable policy and processes, building in it, different automations in regard to the software. If cash flow is an issue, can we build in some other models with, maybe reoccurring revenue that, is going to be a little bit more stable for the company? Do we structure the different kinds of services being offered based on, what are some of those down months that you have to face. Some of the vendor and supplier terms, really trying to negotiate that. I know, Carla, you were speaking with a client, I think a couple months ago in regard to, being able to leverage some of the accounting data and the total amount that they spend with that specific vendor to then go back and negotiate with them. Listen, we're expected to spend $150,000 with you here this next year. What can we do? Because at the end of the day, a win-win relationship helps everybody. So, but again, it's one of those things that the vendor might not even know maybe that you reached those cash flow crunches, right? So it's like I said, always try to ask, because again, it's, you don't want to be asking when you absolutely need it. It's better to be a little bit more proactive with that. So building up a cash reserve, right? So not only just to be able to help with operations, but also to set aside money for taxes as well. So keeping track of that, and then really trying to create a culture with, of financial visibility, whether you believe in open book management and sharing some of the financial information with the company, or just maybe the leaders of the company, some of the management, but having them be a little bit more involved, within the company. And I think with this, what this also leads to in regard to one of the next major challenges that we see companies face is the seasonality that many of you face, right? So, and there's a couple different ways to tackle this, but really one of the overall goals here is you want to match as much as possible the revenue that's being generated with the costs, right? So if you're incurring a lot of the costs in a given month, or even in a seasonality perspective, if you're not incurring any revenue, then that's where you really want to dial in even more, right? And don't wait until the winter or the end of busy season to think about stuff like this, right? You already knew, okay, what position were you in this past early spring and winter? How are we going to solve that problem, right? You have to make some sort of decision to get a different outcome, right? So is it implementing more of a monthly flat billing, depending on the services that you provide? Is it bundling more of the services? So that you can really separate those out, and kind of benefit more from a year-round payment. Also, one of the most common things is diversifying some of the service offerings. Most commonly, people offering snow removal, which is great, not only for the revenue generation, but also you're getting a higher return on some of your fixed assets as well, right? So you're able to use those same trucks for that service line, right? So it definitely helps, whether it's that snow removal, holiday lighting, we're seeing more and more companies get into, even a lot of the install-based work companies are able to maintain, especially even if in some of the colder climate areas throughout the winter. So that's one of the more obvious ways. Now, when you're looking at some of the data as well, always try to view what's called like the rolling 12 information, because that'll allow you to look no matter where you are in the year, from a full 12 month perspective, how your company's operating. So that'll give you a good aspect, because, in June, July, you might be cruising through really well. But again, looking at it from a full year perspective to keep that seasonality in mind. And then also, is there ways, again, similar to utilizing some of the trucks in the off season with those additional work, can we also cross-train some of the team members that have more of an expertise on maybe some of the services during the busy season, but, maybe you can utilize them, in other service lines as well. And what that'll do, especially as you're scaling, it costs a lot to, find other team members and train them up. So, although there might be a cost, and this is something where you can run the numbers, does that cost of maybe operating even maybe a lower profit service line during the winter, does that actually work out better for you than, maybe another option of, having to, rehire people? when the spring starts to ramp up again. So again, maybe, is there, ways you can leverage, some of that time within the off season with certain marketing initiatives. Also looking at just the timing of some of the asset purchases. So maybe if we don't need that piece of equipment until the end of spring or the early spring, or maybe there's certain ways we can work around that. Why don't we, why don't we really focus on not trying to incur some of that expense in the beginning of the slow season, right? Also, is there something that maybe within the off season, you and your team don't have necessarily expertise to offer another service line immediately, but you already have a client list that you've developed over the years. You already have a lot of contacts. You already have a good social media reach. Can you leverage that and partner with some other contractors that offer a service that is actually really busy during the winter, right? And, make that as part of something that you can generate at least a little bit of sales from. So again, thinking about any of those creative ways, and we have companies that do all of these different types of things. Our clients are always looking for creative ways to manage some of the seasonality. And, managing that is, when it comes to, I think, coming into the next challenge that companies face is managing employees and clients, right? So that's one of the bigger things, right? And I think especially being a leader within your company, something that, is there's always going to be certain challenges to that, and that's, it's normal, but it's just about trying to improve each year with that. And Carla, just as she went over in regard to job costing, really looking at ways to make sure that, when you're managing employees, that they're tracking time, right? And as the owner or as the leader of your company, you want to make sure that you find ways to hold them accountable to that. I think it's even, aspects of that too is, telling them, say, listen, this will limit your growth within the company because we're not actually able to see accurate data based on what you're doing in the field, right? Yeah, the projects look great and beautiful, but at the end of the day, we need to have a full understanding of how we're doing when it comes to this time tracking to be able to scale the company and grow and duplicate what you're doing. So,
I always think too, like at the beginning, it is definitely a little bit harder because now it's like a new policy in your company and people are not used to it. And then it becomes so much easier because as you add on team members, it's like a normal thing that your company does. It's like, oh, that company does that. But yeah, that's what we do. It's not like something different, and it makes it so much easier. They're like, oh, okay, we need to track time here. And that's just what it is. They see everybody else doing it. So at the beginning, it's like that. But I think if you could spin it into a positive thing. So another thing is like making sure that you're giving your employees incentives when it comes to some of that compensation to make them feel valued and to have like a positive atmosphere in the workplace. And I think a lot of us are competitive and we want to do good, and it just allows those people to get more of that benefit. And so building bonus structures around what's important to you in your business. So, hey, we get quarterly bonuses here or biannual bonuses here at this company, and we base it off of A, are you tracking your time? B, are you showing up to work on time? C, do you take care of our equipment and trucks? What is the quality of work that you do?
And Carla, and to kind of piggyback off that too, it's not that the bonus is based on them doing their job well and doing those fundamentals, but it's that will unlock their ability to have access to the potential of earning that bonus ultimately. Right. So there's certain fundamentals within your company that they need to hit before you can even discuss, what those certain incentives are.
Right.
So, and those incentives, I think if you're sitting here and, I would definitely recommend before you implement incentives, get some of that accurate accounting data so that you know what you're working with first, right? And then if you really start to operate in a profitable way, start with something a little bit more broad, right? Maybe it's a quarterly bonus, maybe it's a yearly bonus, right? Because ultimately you want to pick something that you can try to stick to, right? And that you're not going to be changing every month. And as Carla mentioned, try to also understand that, they're going to act in the way that they're incentivized to. So if you incentivize them to get work done really quick, then you're also going to have to try to find something to measure quality of work as well.
Yeah. And just make sure that you're also providing training and development to crew leaders or somebody that's going to be your right-hand person, investing in them, taking them to the trade shows or taking a training together or whatever it is, and putting together a development plan, because if people feel that you're nurturing and pouring into them, they'll do the same for you. And in turn, you're going to have happy clients, right? So even if it comes to cross training or anything like that as well, that could be something else and could add to their toolbox too.
And then when it comes to managing clients, a big part of that is, upfront, we know that accounts receivable could be a big potential issue that you can face within your business, right? And it could impact cash flow. So make sure that upfront within the onboarding or when you're having those initial conversations with clients, let them know what the expectation is, And as Colin mentioned, you're not the bank, right? So, in order for you to continue to work for them, they need to be able to pay you so that you can pay your people well as well. And
I think another thing too is like what goes unnoticed is like client onboarding. How do you onboard your client? That's the first impression. And your client wants to feel like, okay, they're valued, they're heard, they know exactly what to expect from you and your team. There's no hidden cost or hidden timelines or whatever it is. You have to be transparent up front and have an easy onboarding process. So the easier you make it for them, the better, right? And the happier they are. So, obviously like answering calls right away or giving them a call back. I think that's just sounds like so easy, but a lot of these people, they're calling and getting, voicemails and stuff like that. So, and that becomes part of the first impression, right? If you pick up the phone, but also communicating your expectations up front, saying, hey, when you giving them the contract or the proposal, saying, hey, this is a few things that to know about our company. This is how often we'll come out. This is what the project's going to entail. This is what we'll need from you. This is what you can expect from us. This is how often we're going to bill you. This is how much we're going to bill you. Anything like that. And just any onboarding to your CRM. So if like they have to go into a client portal via like LMN, for example, just letting them know that up front. And usually people are willing and able to work with anything that you have, as long as you're being transparent and upfront and you build that into your process, and that makes it so seamless for them too. So I think just the first impression and getting their huge pain points out of the way in terms of what they're prioritizing in their project, whatever you're doing at their house.
Absolutely. And then finding ways to really measure the satisfaction, right, of the clients, right? Whether it's surveys or having those one-on-ones with them, or checking up with them after the project, or even just during the project as well, and trying to be as proactive as possible. It's these are big things, especially as you scale. And when it comes to scaling, that kind of brings us to our next biggest challenge, and that's for those of you that are growing quickly, managing that rapid growth, and sometimes it's hard, right? Because it might be the first time that you run a business and that you're growing a business at that speed. So how do you know what that next bottleneck is going to be? Because really the ideal scenario is you want to be proactive to the point where you almost know what bottleneck is about to be reached first, right? Is it, that you don't have enough people to perform the work? Is it that you don't have the accurate financial info to be able to continue on? Is it that you don't have the recruiting system, so different or marketing system, right? So it's really trying to understand and be as proactive as possible. And then also focus on unit economics or what is the profitability of each crew, right? Because you could be growing quickly, but that shouldn't change that, those first two crews that you started, it shouldn't necessarily change the profitability and how they're operating, right? So making sure that before you scale your current economics of how your company operates, that it's operating in a good way. Right? That's a huge aspect as well, because you don't want to scale issues ultimately. That's not the goal.
Another thing to make sure that you're taking account is like your policies and procedures and the operations that are in place. Like what may have worked when you were 300,000 is not going to work when you're 900,000 in revenue. You know what I mean? So like Joe said, it's kind of one of those things where, you want to grow and scale, but then you want to stop, put in new policies, procedures, maybe a new CRM, maybe a new software that's going to allow you to grow to the next 500,000 and so on and so forth. That's how it's going to be. It's not what you have in place day one is not going to get you where you're going to want to be. And that is hard because as you grow, you're going to have more clients, more employees to take care of. But what's important is that you make sure that those employees, the top employees, the leaders, are involved in it with you, that help you get to the next level and implement new software or a new training program or whatever it's going to be.
Yeah, and to get to that next level, also planning when you're doing the budgeting and the planning, plan for that almost like that infrastructure lag, right? So that time that is going to take to hire that person or to implement that new software or to make sure that the team is up to speed on the new kinds of projects that you're working on. So make sure that that's built into your plan as well. So I think it's it's a big part of growing, especially at a fast rate. It's going to increase risk, right? So staying closer to your numbers, staying closer to your people, and really trying to kind of drive that forward. And that brings us to really the last financial challenge that we see. One of the most common, and that's fixed asset management, right? So looking at all the trucks and equipment, both from an accounting perspective, and then also just more from an operational perspective as well.
Yeah, because these are large purchases. We're not talking about $100-$200. We're talking about thousands, $10,000s of dollars that you're going to need to invest into a truck or a skid steer, whatever it is that you need to scale your business. And those large purchases, they need planning around it. Like, it doesn't matter. Like, you need to plan for those because it's just such a big purchase, and you want to make sure that you're able to handle the monthly payment if it's going to be financed, have enough money down, and that it's not going to cause a cash flow constraint. Because what we see, and the reason why this is on here, is because people move ahead with almost like in the industry, what we're seeing is like financing almost every single piece of equipment. And, that really causes a cash flow strain because now they have like 15 fixed cost items, or maybe 15 loans or 10 loans that they're happening every month, no matter what the seasonality of your company is, that loan that amount is going to hit your account. It's going to be debited every first of the month or 15, whenever it is. So based upon the metrics, what we're seeing is that really the landscaping industry, most of their equipment and trucks, they finance. So that's why we also want to build a plan around when we acquire those trucks and equipment purchases. So making sure you're calculating your return on those assets. What is the return on those? Make sure that the financing option, the term matches the lifespan. So if I purchase a truck and I'm financing it for the bank says, oh, you have to finance it for 7 years, but I know that this truck is only going to last another 5 years. That doesn't make sense, right? So make sure that matches. And track your utilization rates. So I know with one of our clients, like we just saw, they weren't using their snow equipment, and it's really causing their return on those assets to be low. So it's like, okay, how can we implement more snow contracts so we can utilize that snow equipment? How can you market more for those specific jobs where you're going to use your skid steer or whatever it is? But if you don't track the return on that specific asset, you're not going to know that, right? And make sure that you have a maintenance and replacement system program to schedule regular inspection, oil changes, tune-ups, to make sure that you're taking care of your equipment to prevent them breaking down on you or having to spend more money on that. And see if you can also buy, lease or maybe rent some of your equipment if it's not necessary to purchase, especially if it's like just seasonal, you're using the equipment just for seasonal purposes, and making sure that, obviously I'm an accountant, so I'm going to say this, you're going over all of your trucks, machinery, equipment that you have on hand, giving that list to your accountant, say, here, does this match what my book say? Does this match what my tax return says? Because right now, like, we have that problem. Like, sometimes the clients say, oh, well, I don't have that piece of equipment, or I sold that and stuff like that. So or I didn't tell you about this truck. And then you're missing out on depreciation expense and stuff like that, which can also hurt your estimating too. So making sure that you are letting everybody know about your major purchases, so we can also make a budget for that and make sure that you're able to purchase that. So, but that was everything on the fixed asset management portion, and I think those are the 7 big items that we wanted to go over.
Yeah, and please enter your questions. Looks like Tyler, thanks for sharing your
the form on Java.
Form. That's
the client intake form.
Yeah, we appreciate that. And we did record this,
so
we'll send this out to everyone as well. If you have any questions here as we're wrapping up, please enter them in the chat, and we'll be more than happy to kind of maybe help through some issues that you're facing now, or if you want another perspective, with the certain challenges.
Awesome stuff. Thank you, everybody. Yeah, just clicked into that form. I like it. Simple, something that your clients could just fill out easily.
Thank you, Laura. It was great seeing everybody today. We'll keep everybody updated with the next webinar, and hope you got some value from it.
Thank you, everybody. Have a nice evening. Bye.
Bye, everybody.